Hello and welcome. You're watching the Business News brought to you by Blytheway. I'm Charlie Gibson. Now, my next guest is from a company that has done that rarest of things. It has put its dividend up, and there are, 4,000 mining shares around the world listed on the various stock exchanges. Only about 52 of them actually pay a dividend. And in this particular instance, the company I'm talking about is Caledonia Mining, and its dividend is rising from 6 7/8 cents per share per year, per quarter I should say, to 7.5 cents per share per quarter. Joining me now is the company's CFO, Mark Learmonth. Mark, thank you for joining us.
A pleasure.
Talk us through the increase in the dividend and the announcement so early in the year.
Well, we've always done a dividend announcement in very, very early January, followed by another one in April, and through the rest of the year. So it's just to come to the point where we feel that given the very strong performance of the business in the last 4 months of last year, we now have the financial capacity to begin to reward shareholders by modestly increasing the dividend, as you say. I think one of the obvious things is it's very hard to say 6 7/8 cents. Yeah. So I mean, take it to 7.5. And we've got to remember that we're now in the closing stages of a 5-year investment program. Now, we're not seeing the benefit of that investment yet. We'll see the benefit of that investment flow through towards the end of 2020. But we can now clearly see the end in sight for the heavy lifting capex. So on the back of very strong financial performance based on a scheduled increase in production in the fourth quarter, coming to the end of the capex, and an increased confidence really about the way that we are operating in Zimbabwe, we feel it entirely appropriate to begin to increase the dividend, and this is the first step.
At the time of your third quarter results, I think you announced that October had gone, or the first 6 months of the quarter at that time had gone particularly well. I mean, this is a statement of confidence to some extent. It's about the future, but it's also about the fourth quarter that's just gone. What can you tell us about that?
Yeah, now I need to be careful because obviously I don't want to start talking about inside information. But when we published our quarter 3 results, which we published on I think the 15th of November, we published the results for that quarter, and as you point out, we did say at the time that the first 6 weeks were very difficult in the quarter, largely because of electricity supply problems. We've rectified that, and the second 6 or 7 weeks were very strong. But critically, when we publish those quarter 3 results, we also publish the production numbers for October. And so it's out there in our MD&A that in October we produced 5,500 ounces. So the ounces are up, and you can see quite clearly that the increased production was due to higher grade. And we said in the MD&A that was continued through to the end of the year. And also, if you consider the full year production guidance for 2019, which is top end, I think about 53,000 ounces. We only done 38,000 ounces by the end of quarter 3. So again, that implies that in quarter 4 we'll be doing something like 15,000 ounces. 15,000 ounces coming from higher grade has an enormously beneficial effect on cash flow because it doesn't cost us any more to produce that gold. The cost per tonne stays the same, so we're not using more labour, we're not using more explosives. And actually, when the grade goes up, you find that the cyanide consumption goes down and our recovery goes up. So you end up in this virtuous circle, which goes straight to cash generation. And it's fair to be said that in the first half of the year, when we were suffering lower grade, we were suffering a vicious circle. So on the back of all of that, we feel much more comfortable to now begin to open the taps in terms of rewarding shareholders with a modestly increased dividend.
The expression always is that grade is king, isn't it? And grades fluctuate naturally. They can also fluctuate as a function of dilution as well. What can you tell us about, given where you are at the moment, or what can you tell us about what your geologists are saying might happen to the grade in the future?
Okay, the historic problems we had with grade were not really about geology. I mean, we were going through some slightly lower grade areas, but we can balance that with high grade areas. The real problem we had, as we've already explained, is that we're moving into narrow vein areas where we needed to be much more disciplined in the mining to avoid, as you mentioned, dilution. And so we had to put a lot of effort into retraining the miners, increasing the supervision, and that takes several months to flow through. And by the end of sort of August into September and then through to the end of the year, those remedial measures that we put in place have really begun to pay dividends. And so the grade has improved.
Give us an update on the state of affairs with regards to CapEx, would you? You sunk the central shaft, you have been equipping it. At some point that CapEx is going to fall away?
Yeah. So we finished sinking the shaft in July. It's a 4,000 foot deep shaft. So it is 4 times deeper than the shard is high. That gives some context. We're now busy filling that very deep hole with lots of steel. That will continue until about July. And so really the heavy lifting CapEx by end of July is pretty much finished. So in the course of 2020, we'll be investing about $20 million, but that's very front-ended. And again, that gives us much more confidence now that we can see the cash generation for the mine has improved as a result of improved production. We can see the end of the CapEx program. And again, it's one of those factors that gives you more comfort, more confidence to increase the dividend.
So you just tickled the dividend up a little bit this time. Is there scope for...
There's 2 approaches in terms of managing the dividend. And let nobody be in any doubt. There's a technical report that makes this very clear. When we achieve our target production rate of 80,000 ounces a year, we've indicated that our target all-in sustaining cost per ounce will be between 700 and 800. Just do some simple maths and tax it, and you can see quite clearly the free cash flow coming out of this mine from 2022 onwards is going to be enormous. So we know that we'll be in a position of having more cash. So we're in a position where we can, when we want to start to consider how we increase the dividend, there are 2 approaches, and you've already indicated one approach is to tickle it up, and the other one is to bang it up. Okay. The advantage of tickling it up is that you can start tickling earlier. If you want to bang it up, you've got to do it later. So again, all these things come to the point at which we now begin to believe it's prudent, it's the sensible thing to do to begin to tickle that dividend up.
Mark, thank you very much indeed. Ladies and gentlemen, that was Mark Learmonth there, the CFO of Caledonia Mining. Just as you heard, tickling its dividend up from 6 and 7 cents per share per quarter to 7.5, and perhaps portents for the future. You could have bought Caledonia about a year ago for £4.50 a share. You can now buy them for about £6.20. So what's that? About 33%, bit more over the course of the last year. So perhaps more to come. We will be back with more such opportunities in the very near future, we hope. But until then, you have a capital day.